Hey, welcome back, everybody. So today I'm going to be talking about leap options and specifically what leap options I've been buying myself, and just want to give you an idea of what I'm trading these days. But if you don't know what a leap option is, I've actually gone a lot more in depth in other videos, so I won't talk about that too much. I'll briefly explain what it is, but yeah, I just want to talk about, some ideas if you're new to investing and if you are considering leap options. These are just some stock ideas that you can trade leap options are. Okay, and again, leap options are one of the best strategies, or is one of the best strategies for stock options, or just trading stocks in general. If you're invested into a company, that's my opinion. And this in no way is financial advice. This is just simply stocks that I've researched and I'm trading myself. And so if you like this content, just be sure to smash that like button. It really helps with the YouTube algorithm, especially because this channel is so small. So I would really appreciate that. If you have any feedback, would appreciate a comment below, and make sure you subscribe if you want me to make more videos like this. Okay, so as you can see, this is my Interactive Brokers account, and I have quite a few leap options open. A lot of them are expiring, uh, you know, January 2023. What I like about Interactive Brokers is it does show a dividend date. So the downside in leap options is you're not able to collect dividends, but the upside, of course, is you pay a lot less to essentially own the same power you would have in 100 shares. Okay, so just a quick refresher really on leap options. If you don't know what it is you're buying uh, a long-term call option. Okay, so meaning that expiring in a year or more out. And normally what I like to do is I like to go deep in the money so that the movement of the stock doesn't have to go up as much. Now you do pay more on a premium, but to me it's worth it because you don't need to guess how much the stock needs to move up. You just simply need to be right on the stock eventually moving up somewhere, right? So let me give you an example. Let's say I'm bullish on American Airlines. I know the last couple, years, or the last year really, American Airlines has been up and down. It's made a really good recovery, but let's say I'm bullish and I'm thinking, in a couple months, American Airlines is really going to take off because the whole travel industry is back and alive, and everybody's just going to be flying again. So I would go to my Robinhood account now. Just for the newcomers, the reason why I use Robinhood just to identify like with my trades is because I actually think Robinhood has a really clean interface. It just helps me so much to identify, okay, what are the break-even points, what does a graph look like, and I'll show you exactly what it looks like. But I don't actually trade my leap options on Robinhood, right? So I use Robinhood simply as a tool, and then I would go into my Interactive Brokers account and then do the actual trade. Now, why do I do that? Long story short, because Interactive Brokers allows me to borrow off of my equities. So meaning that if I needed cash tomorrow and I'm invested into this leap option, I can actually borrow on a really low APR, which low interest rate on my equities. So it just allows me more flexibility in terms of my money. Okay, so taking a look at this leap option, if I were to open a leap option, I would go out into a far expiration, at least a year out. So let's take a look at the earliest one would really be January 2023. That would be a year out. And yes, I can buy call options. See, as you go higher out of the money, your call option becomes cheaper, right? So, meaning that American Airlines would really have to go up to $25 before you would see a profit. And so, therefore, the stock would have to move up 40% if we're buying this call option. Now, I don't like that because I don't really know if American Airlines is going to go up that much. It may be, right? It may very likely could go up that way. I don't know. In fact, I'm not even trading American Airlines right now This is really just for demonstration purposes. But generally, what I would do is I would probably go deeper in the money, which means that it's under the strike price. Now, you'll see that the premium is higher, so you're paying a little more, or usually a lot more. For you to profit on your trade, the stock really doesn't have to move nearly as much. Okay, so let's say I'm trying to buy a leap call option or a leap option at $12 a share. Okay, so on January 2023, I'll have the right but not the obligation. So I can buy 100 shares at $12 if I wanted to. And today I pay a premium of $820. Okay, so the way I would profit is the stock has to move up to a certain extent where it covers the premium, and then after that, I would start to profit. Okay, so Robinhood makes it real clean and shows you exactly how much it has to move up for you to start profiting. Okay, in this case, it would have to go up 5% until before you start to make a profit. Okay, so if I were to open a leap option, most likely I would probably open up the $12 call option so that the stock would only have to go up 5% from today for me to realize a profit. But that's just me, right? Now, of course, everyone has their own preferences. Some people are more just open to risk, and they're willing to bet that a stock would go up much more than that. And if that's your cup of tea, that's completely fine. But just know that a leap option generally is at least a year out. Okay, so now that we understand what leap options are, I want to talk about a couple interesting stocks that I would personally, and I have personally bought into for as a leap option. Okay, so I want to start out really as sort of like this pyramid technique where let's say you have $1,000, right? Like if you had $1,000 and you can only choose one leap, what would I do? Okay, so I would probably go with Barclays. Okay, so Barclays, as some of you guys may know, okay, is a British multinational universal bank. It's just a really huge company. I like it because the market cap is $46 billion. P ratio is 6.5. That's extremely low. If you look at the year-to-date chart, it's gone up 45%. Okay, so 45% ever since year-to-date. In the last year, it's gone up 94%. I really think Barclays has so much more room to run. It's run by 83,000 employees. It was founded in 1896. Okay, so this is over 100-year-old company that is valued at a price earnings ratio of a really, really measly 6.5. So I do think it's going to go up. Let's take a look at how the leap options will look like. So I would buy, so the earliest would be expiration date, which is set as January 2023, because that's a year out. And take a look at this, right? There's so many options right now where you can buy leaps on Barclays for really, really cheap, right? If you take a look at the $10 option, you can buy a leap option for $2.03 per share, meaning that that total leap option would only cost you around $200. So you can probably buy one, two, even three, four, I don't know about five. You can pretty much buy five contracts with $1,000, right? Now I probably wouldn't put all my eggs in one nest, but technically you can buy quite a few. Now, personally, I would probably actually go a little deeper in the money, probably buy the call option at $7, just because the price movement will only have to go up 2% before I start to realize a profit. Yes, I do pay more on a premium, but for me, I think that's something that I would consider worth it. Okay, so Barclays is the first leap option I would buy. Okay, now taking a quick look at my portfolio, just because I may not remember every single leap option I've purchased. Okay, so the next one I would purchase after Barclays is CPG. Okay, stock ticker CPG. Let me show you what it's like. CPG stock. Okay, Crescent Point Energy. It's in the oil and gas industry, based in Canada, Alberta, Canada. If take a look at this, right? 3.67 billion market cap in Canadian dollars. The P ratio is not showing here, but it is a very decently valued stock. If you take a look at the 1 year chart, it's been up 300%. My goodness. If you had bought just earlier this year, you would have made a pretty nice profit. Now, I do think Crescent Point Energy still has a ton of room to run. There's just so much potential in the pipeline in this company. And right now, look at this. The stock is trading at $5.06. So let's take a look at what leap options we can find with CPG. And we'll see. We'll first set our expiration date out. Now, okay, so this particular stock, sorry, I lied to you. Okay, so you can't actually buy a leap option, or technically you can't buy a leap option because it's not a contract that's a year out. But you can buy an option that is maybe half a leap. Okay, maybe it's not called half a leap, but that's expiring at least 4, 5, 6 months, 6 months out from today. So April 14th, 2022. I still like that because it gives you far enough runway for the stock to go up, and at the same time, it's not it's not super expensive, especially if you take a look at some of the options we have available now, right? So if you take a look at the $2.5, it's only at $2.63 a share, meaning that if you bought the contract, it would only cost you $263, right? And the stock would only have to move up 4%. Well, actually, the stock would not even have to go up that much for you to realize a profit, right? That's a pretty amazing deal. So long as the stock doesn't go down at the end of 2022, you're going to make a profit, right? Now, whatever goes up, of course, you're going to make even more. You can also buy the $5 call option, where you're betting that the stock would go up by at least 15%. And then you're looking at a really, really measly premium of only 93 cents a share, so meaning that you can buy a contract at $93. Right, so you can really go wild with CPG. You can buy 10 options if you had $1,000, and or you can buy 3 options at 2.5. Again, I wouldn't put all my eggs in one basket, but this is a really good leap option, I think, to purchase. Okay, the next stock ticker for leap options I would purchase today would be. This is actually a little. I'm trying to look at my portfolio, see which one I would. Okay, so definitely steel. Okay, so American steel to be more specific. Okay, so United States Steel. Oh man, yesterday went up a lot. I do see the leap options I have open on that really popped up, and that's why I think steel is a great buy for leap options. I still think it's a great buy. So let's take a look. Okay, so X stock, United States Steel Corporation, more commonly known as U.S. Steel. Okay, so it has a market cap of $6.65 billion, a low PE ratio of 8.09. Steel industry has been hit so hard in the last couple of months, but I do think it's going to have a rebound. Year to date is still up 43%. Yes, it is a more volatile stock where it goes up and down a little more, but I do think the long-term horizon for this company is going to be huge because it is basically one of the biggest, or if not the biggest company essentially in the U.S. that produces steel. Okay, it was founded in 1901, another 100-year-old company. It has a revenue of $9.74 billion last year, almost 23,000 and some change employees. Okay, sorry, I shouldn't have to use some change. 23,350 employees, and I just think the stock is really beaten down in the last month or so. Okay, so in the last 6 months, it's been down quite a bit. Okay, taking a look at the stock options. For this one, we can buy an option all the way out January 2023. If you take a look at some of the options we have, this is going to be a little more expensive, especially if you're going deep in the money. But that's because the stock literally just popped up yesterday, so it's a little more expensive today. But you can look at the $20 option, right? $20 option is only at $7.88 a share, which essentially you're paying $788 per contract. So you can buy one contract of steel if you had $1,000, right? I would even consider, earlier expiration dates. Now, it doesn't make it makes it technically not a leap option, but I do think steel really might pop up earlier than that, and you can compare some of the prices, right? It's gonna be cheaper. To me, the reason why I prefer normally longer term leap options where it is a year out is because the premium actually isn't that much higher. If you take a look at June 2017, 2022, the $20 call is $6.50, right? So you're paying $650 for a $20 call on June 20, 2022. If you extend it out 6 more months, right, it's only $7.88. So you're only paying about $160 more for the steel to have 6 more months to run. So that's why personally I tend to buy leap options with a further expiration date. Now, the hardest part about that is really just being patient. In fact, a lot of times I know there's tendency to sell way before, like literally a month after you bought this leap option. So I would say the hardest thing about buying leap options is really just the patience, right? If you have the patience to hold, I think that's where you'll really realize bigger profits. Okay, so but again, steel, there's some great deals right now for under $1,000. You can get a contract. And again, these are just a couple companies that I'm personally buying leap options are. I would recommend doing your own research, of course, as always. And again, I'm not any kind of financial advisor. These are just stocks that I'm simply buying. Again, if you like my content, if you want me to produce some more, make sure you like and smash that like button. I would really, really appreciate that. Until next time, guys, I will see you guys next time.